All right, how's it going, Tycoons? For today's video, we are going to be going over just a strategy you can use to trade supply and demand zones. Particularly, this will be more relative to day trading. Okay, so what you're going to do is I like to go to one of the charts I like to look at is the 1 hour, and I like to look at the chart and see what the 1 hour supply and demand zones are. All right, that's basically where the market is in agreement and there's a balance in the market, basically on the price. Okay, so the market makers who fulfill everyone's orders, because most people trade through a brokerage. If you're like a retail trader, for instance, who's traded through a brokerage, who most likely sends their orders to market makers, who then fill the order, right? So the market makers are agreeing, as you can see, on filling orders in here, and there's basically an equal amount of buyers and sellers. Okay, meaning the market is in agreement in this area and it's just going up and down. Okay, all right, so that is basically a demand zone, and then on top we have our supply zone. Okay, so on top we'll zoom in a little bit more, so you can see once we've been above here, there's been kind of an agreement. Basically, the overall supply is, they're in agreement on the balance of the supply. Okay, and then once it gets below there, it starts dropping. All right, so we're going to go down and look at the 5-minute charts now. And I'm going to show you guys how you can use this strategy on small time frames after you have charted up your supply and demand zones, and how you can use it to make profits quickly, and how to, where you want to set your stop losses and different scenarios. Okay, so as you can see, where the market is opening up in the supply zone, okay, we have a break, and this candlestick closed directly at our the bottom of our supply zone. Okay, so once we see this candlestick break below, all right, we can go bearish. We can buy puts on this. Okay, so you can buy puts and you can ride that momentum down to the demand zone, and you can sell here at the top of your demand zone. Okay, or you can sell at the bottom, and you might not get the bottom. As you can see, it wicked down pretty closely here. But you can take profits here and anywhere in between this region. And if you see it break below here and start to trade below here, you can hold it even more instead of trailing stop loss or something like that. Okay. So it's red up here, basically the supply. So it's indicating sell. Okay. So when it's up here, you're looking to sell. All right. If you're not already in a position from like halfway or above, then you want it to break below here. All right. And go down, enter the demand zone. All right, and I'm going to show you guys basically if you would have bought here and here, what you could have made. All right, which if you would have bought and sold in between that time frame from buying in your demand zone and selling once you hit your supply zone. Okay, so what I've done is I went to the options and I went to the call options, because if we're going to buy here, a call option is bullish, meaning the stock, we think it's going to go up. So we'll look at some bullish call options. All right, we have the 18 calls right here. Those would have been the next in the money puts, or in the money calls, or out the money calls. Basically, in this area, the stock was below $18. So this would have meant that 18 was out of the money, and it would have been the next one out of the money. And once the stock price was above 18, it would have been what's known as in the money. Okay, so we'll look at that. And if you hit right click and you can copy it, okay, and then you can go to your charts. You can pull up another chart like I've done here. All right. And you can go and paste it into there. You can hit control, paste, boom. All right. And now we've got the value of this option chain. So what the option chain is worth, and we can now see what that was at the precise times. Okay. So I have the 30-minute chart pulled up for this. We'll go ahead and zoom back in here and we'll look. And if you can see here at this time on the bottom, it says the time. Okay. Look down here. If you would have bought at 10:30, all right, and you would have sold at the highs of our supply zone right here. Once we entered the supply zone, okay, that was an increase of 3.62%. However, in our option that we are looking at, that was a total of 24%. If you bought at 10:30, this is the close of the 10:30 candlestick, as you can see down here. Okay, 10:30 right here. This is the 10:30 candlestick. To that high, it's 24%. All right, and that's if you bought at the top of our demand zone. All right, so that's not a perfect entry. That's where you may want to get your feet wet. Okay, you might want to do half your position size here and maybe add half here at the bottom of your demand zone or somewhere in the middle. And your stop loss is going to be a couple points below your demand zone, okay? Because you don't want it to get triggered. You don't want it to just go right here, a couple points below, like, you know, just a fraction below, and then you get stopped out, okay? I would give it a little bit of breather, all right? So I would say maybe around 17 even, I would be out of this completely and call it a loss, all right? You know, but if you buy here, it's not a very big risk, okay? Because your risk is if from 17 to 0.2 to 17 is only, you know, 2-point loss, you know, but if you buy at 17.6 and your stop loss is 17, that's a 6-point loss, okay? So it's all about gauging your trade and just understanding your risk to reward ratio. All right. Now, if we look here, if you would have bought at 12, okay, and we'll go ahead and show this one real quick, how much it was. This was a 5% increase from 12 p.m. Eastern up to 1:20 p.m. All right, that was a 5% increase. But if you look on the option chain data and what the option is worth, that was a 36% increase. So this is how you can trade options and try to understand the leverage that options hold and why entries and exits are so particular. Okay, because if you would have bought calls, let's say here at 1789, at what time is that? 9:50. So at 9:50, you're somewhere in between here. You know, you're somewhere in between this red candlestick and this green candlestick. So, I mean, you know, the max profit on that, it was only 11% if you would have sold it at the highs. So that's something to just be aware of, be mindful of. All right. As you guys can see, I like to use these EMAs, the 9-day EMA and the 21-day EMA. They help to act as a support and resistance on bullish trends or bearish trends. So as you can see, we had the bullish trend go on. We started trading above these candlesticks. We're bouncing using these these indicators, these EMAs as a support level. All right, we're rising above, we're bullish, we're trading above these. We're bouncing off the EMA, we're bouncing off the EMA. So we're still indicating bullishness. You know, this thing could go up to 18.63. You know, or it could fall back down here and go back into this demand zone. Okay, so the more time it spends in these areas, the weaker they become. All right, so you know this one has spent a decent amount of time in there. Basically, what this means is that the more market orders are being filled, and there's going to be less orders for market makers to fill in these areas. Okay, and once there's no more orders to fill, this is no longer going to be a supply zone, and you know it's going to blow past this and it's going to be above you know the top of this supply zone right here. Okay, it's the same thing with this. Once there's no more buy orders down here, you know this is just going to fall right through, and this is going to be our next 1-hour demand zone. Okay, so you could expect the stock to possibly fall in between here and you know come to this. All right, so this would be our new supply zone. If we drop into here, this could be our possibly new supply zone. It could flop from a demand zone to a supply zone, and we could sell off into this, and this would be our next demand zone. So let me know what you guys think. Let me know if you like this video. Hopefully that strategy makes sense, and it's really effective. And a lot of these trades that I showed you, you know, 18 minutes, 35 minutes, and you know, you're able to get 25% in 19 minutes on this one. In 12 minutes, you're able to get 36%. You know, and you could have held these, and as you can see, it's still rising. All right, the VIX is still rising, but you know, this is just an example of how to be clean and precise, and also show you how to trade options. Okay, because a lot of people don't mention it, but trading the SPY, trading the QQQs is one of the easiest ways. They're the most liquid, you know, things in the market, and you can get in and out of those trades very quickly and easily. And you know, in 12 minutes, you can get yourself 25, 35. Today, I got over 100% on 8 minutes on trading ticker symbol CRWD. And you know, if you want access to my trades where you could have copied my trade and followed my call out, you guys need to go ahead and join the Discord. Okay, you can use code Zackley, like the channel name Zackley Trades, and you can get yourself a discount on the membership. Okay. And in the Discord, you will gain access to my call outs, the plays that I'm in, also the plays that the other admin members are in, and then we have a lot of other resources as well. We have unusual options activity data in there. We have sweeps and golden sweep technology in there, data. There's a lot of data and resources in there as well that you guys will get included with your membership. All right. So thank you guys for watching. Don't forget to like, comment, and subscribe. That would help me out a lot. Let me know if there's any ticker symbols you want me to review, any crypto you want me to review, or any tutorials or strategies you want me to cover. Thank you guys for watching.